Live, and we're just going to see what happens.
It'll go live. It'll just be
10 Hey, what's going on,
seconds.
everyone? This is Tyler Coates with the Honest Analysts and my two favorite co-hosts, Joe Saz and Fib Swanee. We are running a little bit late here today as I am having some technical difficulties. This is my first time streaming from the road on my laptop, and I did a practice stream. I thought everything was good to go and was excited to be able to bring this on the road with me, and of course ran into some issues that were unforeseen, and now I'm just hoping that everything goes smoothly from here moving forward, because we definitely do have some good action in the markets. The price is moving, as it has been liking to do recently, and I'm sure that we're going to have plenty to say about that. I'm certainly excited to get into it, with everyone, and a little bit of exciting news to share. Yesterday, I had the honor of presenting to the CFA Society in Singapore via the web stream, and it was quite the treat. As a former financial analyst myself, I remember going to a bunch of these meetings, about 90% of them being, very uninteresting. And when I left that industry to get into Bitcoin full time and really decided to dedicate my life to this space, I wouldn't have thought that in just a couple years I would be in the front of a class. It was over 100 financial advisors who were soaking up what we were talking about in terms of Bitcoin and gold. My presentation was specifically about Hyperwave and Bitcoin, and there was another one about gold and the history of money, and they tied together very well. The other guy that I was presenting with was the first author of a Bitcoin book that was ever written. It was written in like 2014 or something like this. So he was a very knowledgeable individual, and the exciting part is that I think I coaxed them into letting me share that presentation here on the YouTube channel. So stay tuned for that. It was recorded and it went really, really well. Kind of got in the zone and hit them hard with some facts, and left them with the question of what is more risky, to own 5% of your portfolio in Bitcoin, or to have 0% of your portfolio in Bitcoin. And I think that that is going to go a long way to help them understand that, the people that are on the fence, just getting their toes wet a little bit can make all of the difference in the world. And just thinking about the trickle down effect of how many people go to their financial advisors and are going to ask them about Bitcoin if the price is going up and moving. And if none of them know what they're talking about, or they're just afraid of it, they're just going to say it's a scam or whatever, they're just going to try to brush it off as quickly as they can without looking like they don't know what they're talking about. Whereas these guys were asking some really, really good questions, and we had some really good answers for them. And now, not only do I think I've got some financial advisors converted to this space, that should hopefully trickle down to convert many others who go to them for advice. And like I said, we'll be excited to share that here as soon as I can, because I am more than motivated to get out as much information as I can about how to invest in Bitcoin properly. And with that being said, that's kind of my exciting news. That was a big deal for me. I spent a lot of time preparing and trading over the last couple of months. So taking a couple days just out of town, out in the Indian reservation in New Mexico, which is my favorite kind of spiritual place to come. This place always really calls to me, and as soon as I get here, I can feel the energy. And I've noticed that when I really sink my head into something and I focus on this trend that we've been seeing over the last couple of months, just taking a day or two to just kind of get out of that space and kind of clear my head makes all of the difference in the world. So that's kind of what I have noticed to be my preferred approach, is to dive in head on and just delve in as much as I can, totally lose myself in the Bitcoin price action and trading and doing that, full time. And then after, kind of getting out of a big trade or something like this, or maybe having a presentation, or in this case, both, just taking a little bit of time to see the sunset and smell the roses and reflect on, how things have been going and if they've been in line with the goals that you set out to accomplish. So that is my spiel about how I'm doing, and excited to hear. I'm going to throw it over to Fibbo first. I'm seeing a nice desktop background in your mirrors over there, some space stuff.
Oh yeah, no, it's just a screensaver. I'm not using that monitor at the moment. Yeah, it's not mirrors, it's just reflection off that glass. But yeah, it's pretty colors. No, did you say it was CMT symposium? Is that what it was?
CFA, Certified Financial Analyst.
Oh, okay. I couldn't hear what you said at the beginning there. Cool. That's awesome. Nice. Cool. Yeah, that's awesome. Yeah, no.
And they even let me do it in my hoodie. I mean, how cool is that?
Did they really? That's awesome.
Yes.
No, that's cool. That's cool. Yeah, looking forward to watching that video. That'd be kind of interesting.
I'm glad to hear it.
I already know. I've already heard from you. I want to hear the other guy now.
Yeah, you definitely do. We had some really good stuff to talk about. And
no, I'm doing good. I'm jealous that I'm not at the Indian reservation with you. I think that would be kind of a pretty cool place to be, and like just kind of very relaxing, I would think. Just being like you said, like small communities, and I'm sure the atmosphere is just completely different compared to a lot of other places. So I think it'd be kind of cool to be there. That's one of the reasons I go to Colorado. I mean, because for me, mountains are my meditation. So you probably get the same thing going to the Indian reservation down there that I do when I finally get over into the mountains. So
yes,
I know what you're going through. When you get a couple days off, it's a good place to unwind.
No doubt about it. It truly is a special place, and just being able to drive through and stumble upon a trading post and going in, and what I spend at $30 at a trading post on the reservation. I think I was showing off some of my art on the New Year's Eve show. It really, proves to me the value discrepancy in some parts of the world, which that's definitely what I'm attracted to. And the main thing that I love more than anything else is going to museums and just really soaking in the history of it all and what's all right here, right around me. So that's something that I am very lucky to be able to do. And nice, Joe, nice. Tell us about yourself. I'm seeing a sweet leather jacket you got. I mean, you're looking good. This hookah, what I like about it the most is it looks like a wand. You look like you're Harry Potter,
All right. I don't know what to say about that. Great series.
Just don't cast a spell on me, buddy.
No, you don't have to worry about any what are they? Forbidden spells. But happy to be here. Happy to see you guys both looking good. Definitely been a wild market. It's like, all hope was kind of getting lost, and then kind of recovered a bit. And it's been one hell of a market. Plus, we have all those other things going on in the traditional markets, which is actually making me pretty excited to see that kind of mayhem go down. So it's an exciting time. Excuse me.
Very exciting time. So any volunteers for who wants to start?
Well, I'll take the short-term time frame in case someone pops over here at around 8:30.
Cool.
All right. Is that cool, Fibbo?
Yeah, go for it.
All right. I just need some screen sharing capabilities.
You got it, buddy. Not even gonna make you say please.
And I do have a scar on my forehead too. That it's unknown, how I got it. So, consistent with the Harry Potter thing,
Yes.
Just kidding. I know how I got the scar, but.
You're dropped on your head as a baby. We know.
Yeah, pretty much. So we're pushing up. This is what's getting a little weird. We had a really, all right. Let's look at the past week or something. Let's get like a 10-minute up here. We ate all the way through. I think last time the last really solid bottom was when we hit the Ruby mine on the actual 5 to 10% band, as well as the 2.5 to 5% band. And we were getting trade signals. It was a tough time to trade. We didn't break the bottom of this one I don't think. But this was definitely a good bottom. I was bottom hunting this day, and it was very, very, very difficult. Just constantly getting stopped out of trades, raising stops. Money management completely saved my life and got me in on the bottom. I ignored a few of the, in fact, all of the short signals because I was very confident that we were in still really in a bullish posture, and now I'm kind of more willing to scalp out, and I'm not looking for the bottom. So we did fly up from a lower low, or approximately the same low, with much weaker signals. That scares me. These bounces are getting weaker as we check these horizontal areas. They're getting weaker. So it's kind of like the stone skipping across the water. I have a feeling it's going to plunge if we do this a few more times. More like 1 to 2, maybe 3 more times we have this bottom in us before breaking what is likely to be a descending triangle formation here, on a larger time scale, of course. But yeah, we just kind of flew up. The short signals of late have been a little bit treacherous. I'm kind of trapped in a trade right now, and I'm thinking about what I do here. I mean, this is a pretty large price range, all the way from entries at around 33.5 up to about 34.2, a $700 span there. So this is a big move already. Got a lot of signals, got a lot of consistent signals. So definitely shows that this is a trade I want to hold on to for a sec. But the thing that really trips me out is as we got higher in price, bulls in perpetual markets got more bullish. This is in the perpetuals are probably where some of the smartest traders are, but the point is, it's really weird when you get this price move up, bulls get extremely bullish. This is a pretty wide bid ask spread, and of course we're pushing up into spot signals, so I'm getting a little bit nervous here. I do want to give the signals time. I want to have a little bit of faith that they'll play out, but it's getting a little dangerous here, almost getting ready to pack bags and dip out of this trade. But other than that, I think that we're going to be topping around. Last time we got the top, I think it was up here on, I can't remember which one it was, to be honest, but there was an actual top 2 times in a row where on something like the 5-second chart, we got trend bias signals on the sell side. So if we get that again around the top of this descending triangle, which is in the mid to 36,000 range, 35,000 range, then I'm going to be pretty convinced that we have a descending triangle forming that's going to ultimately play out as a breakdown. So that's pretty much what I see playing out right now. These are some pretty strong attacks on the 50, good support held on the 50 simple moving average on the daily, but right back into what started off as a bear trap, turning into a descending triangle with a little bit of a touch here, and of course the potential for our way back up soon. And yeah, I'm just a little worried about the overall price structure, what this will mean, what a breakdown will mean here. This is the 30% pullback in a bull market so far. Now, if this gets more violent and we create a descending triangle and break down, is everything done and over with? I'm not so sure, but I am worried if we break this trend line that we're probably going to start shifting gears a bit, and sellers are going to run the market for at least a little while. I'm getting a little worried about this market, man. Just to be 100% honest with you, I'm getting a little worried. I think this descending triangle is going to end in a breakdown, and that could be bought up, but it could lead to a bear market, and hopefully a fast one. So short time frames are saying sell. Of course, the bulls are stepping in and pushing like hard into resistance. You can see them running the front end of the book. Even at these levels, the top 3-4 aggregations are pretty much piled with orders on the bid side. The sell side is pretty static in nature. It's not like sellers are really jumping out of left and right and throwing 27, 30 packs, 50 packs at the bulls, annihilating them. So it looks like sellers are trying to get some fills up here. We are starting to get some pretty deep, sell side control here in the 0 to 1% band. We're looking at a 40% a ratio of essentially 7 to what is that? At this point, that's about 5 to 1, 5 or 6 to 1, and then approximately the same in the 2.5 to 5% range. And now the trend bias band is on its way to creep in. So I mean, I'm hoping that we get a little bit of a pullback, clean out of this trade, get back up there, and get some sell signals and some trend bias signals, and that would really really make me confident in the short term for this triangle to play out, back to a bottom, possible ping pong in and out. And, I think once we break this trend, all hope is lost, this trend line. So we have a bit of time, but that's my quick
Great.
outlook.
Beautiful. So you said that you were short right now. Did I hear that right?
Yeah, I'm short right now.
Do you mind me
And
asking where your stop out would be?
Oh, my stop is, pretty much, I want to give myself a little bit more pain. I want to give myself probably till around 34.7 or so. 34,700 is probably where I really want to worry about my max drawdown for this trade after, a sequence of good trades over the past few days. Like I said, bottom hunting, getting some good closes. This one I closed a little early, but yeah, right now I'm thinking, my max drawdown, I'll probably be exiting above 34.5, something like that. And I really hope these signals start kicking in soon because I don't want to take a stop right now. I want to at least exit closer to break even. So it's a little bit of a stressful time for me right now. I hate trades that set me back. I hate trades, but of course you can't win them all. So I have to be ready to take an L and then sit out of play, go buy, go do some retail therapy if needed, and then come back with a fresh head.
Excellent. I appreciate you elaborating. That's a very similar level that I'll be looking at when I get into my charts. You said something else that caught my ear that I wanted to make sure I heard right. You said that something along the lines of risk management saving your ass. What was that?
Yeah. So that day where I was, pretty much on this day, back over here, something like this, to me, and when my trend bias was bullish, which it, at the time, this was seeming like a really, really good dip to buy, right? The bull market was still very much so intact. This seemed like a good check of a higher low, good signals. We, and then I'm expecting every single one of these longs that I take to be the long, so say I stagger in here and then I end up getting stopped out and then I end up catching this one and then I raise my stop and it was like just constant work as a trader this day. There wasn't anything that gave you a peace of mind. You raise your stop, you get stopped out, you get signals again consistently, you think that this is the bottom, you start stacking up your lev. Next thing you know, you're right back in pain if you didn't stop out, if you didn't raise your stop. And this was what I mean by money management on this day was I just kept I entered my trade, put in my stop. I would add leverage as my trade went against me, but I wouldn't change my stop. And if I got stopped out, then at a loss, then I got stopped out at a loss. If price did start to rebound, then I would start, raising my stop closer to my average entry. And just after repeatedly doing that, losing trades, winning trades, a lot of, kind of break even-y at the end of the day, I was able to leverage heavily when we got into this Ruby mine zone. I was like, this has got to be it, after all this day from, what's this, the first signal starting at 8:30 a.m., getting the Ruby mine at 120. So after trading for 4 or 5 hours, constantly, stressing, caught that bottom. And basically what I'm saying is it's that money management, that refusal to let a trade ride and to fully believe and say, hey, I got control of this market. I got a trend bias signal. This is definitely the bottom. I had to be, really unbiased about my trades and raise my stops. The market was just really, really funky. This is a tough day. And, this does go to show you that nothing works perfectly, especially if you're using high lev. I mean, this would have kicked you out all the way down to 29,000 or whatever. So it's really tough. You got to be careful and you got to raise your stop. And, at a time like this, the market was hot and money management is what saved me and caught me in on this bottom. I did trade many trades. Some of them were wins, some of them were losses, some of them were break evens. Most of them were market orders, and that was just how it was that day. And then, had a good walkout, had a good support, and this one was tough. I ended up closing somewhere along these lines, and waiting. After all this stress, I ended up getting out clean and setting up again on this trade, which I was very unconfident about, and I got out very early on this one, probably like one of these two, caps areas. And we did run up a bit higher, so I gotta assume that these sell signals will kick in. But yeah, right now it's, the money management is what it's all about. After catching a big bottom and getting out some really good trades, I really need to, the money management is, you got to have a stop loss. You got to have a point where you're straight up wrong and you need to accept it, because the market is not something that you can just pick and choose how it goes. So that's kind of the thought there.
Beautiful. I appreciate that. I think that's the most important thought. No matter how many times we talk about it, I think it is definitely the most important thing to talk about, and something that I guess have realized that has really helped me is that I have to be cognizant and comfortable with the risk before I get into the trade. So if I am going to understand my invalidation point, and I am not going to really understand exactly how much I'll be down once it gets there, especially if I'm going to be adding in as it comes, as it goes against, and I get a better price. And then now all of a sudden I find myself at my invalidation point and I'm down way more than I thought. Well, that's where I find myself trying to hold on for some sort of miracle to let me out. And so really planning out a trade is, I think, maybe the most important part. And it's just as simple as a pen and a notepad, writing in what's your entry. And if you are going to add, then you put that down, and then you combine them so that you have an average entry and an average cost basis. And then you know where your stop is preemptively. And then you can calculate with simple math what the percentage difference is and apply that to the total exposure if you already get fully filled. And then you see, oh man, I'm risking, oh man, I don't quite feel comfortable. Once you become cognizant of the risk, then pay attention to your feelings. If it really doesn't feel comfortable, then there's a good possibility that you're going to end up making mistakes, and that's going to be a situation where you're always going to end up losing, even if you're on the right side of the market. Something's going to happen, and that's I guess my experience, and that as long as you can just commit to managing risk, no matter what, that's going to be the number one rule. It's a video game where you have infinite lives. As long as you don't completely blow yourself up and have to quit and leave forever, then you shouldn't be afraid of those positions getting stopped out. And you should, of course, understand that it's going to happen. And as long as you understand that it's going to happen and you're comfortable with the risk going in, then it just comes down to having the discipline to execute. So thank you very much, Joe, for outlining that. And just like I thought, like a wizard with his wand as he is looking at the charts. So how about it, Fibbo? Western Kentucky, are they doing any good in basketball this year?
Oh yeah, actually they are doing pretty well.
Nice.
Their basketball team is usually pretty decent.
Will they make the big dance?
Probably not. I don't know. I'd have to look into that. I'll have to check on that. Most of the time, because of the division that they're in, or whatever you call it, not division. What's the word I'm thinking of?
Conference,
yeah. For some reason, I couldn't think of the word. Yeah, for the conference that they're in, they pretty much got to win their conference to get in, because their schedule is usually not super strong. But this year, I think their schedule is pretty decent and they're doing pretty well. So I'd have to check on that and see if they'd be like a bubble team or not, getting in. So, but I mean, I got a lot of WKU stuff because that's where my kids or Emmerich's graduated from there, but my daughter goes there now. So a lot of money goes toward there. So I might as well wear sweatshirts, right?
That's for sure. And that's why I was asking. I hope the kids are doing good. Is Emmerich's girlfriend still out there? Is he still?
Yeah. She's in her final year out there. Yeah, she's down there at the moment. So, and he's working from home in his bedroom right now. So
Well, tell him I say hi.
Yeah, I sure will. Let me share a screen so we can look at some charts here. Let's see.
I'll look in.
Yeah, there we go. The what?
You got it.
There
I
you
just
go.
let
There you go.
I just let you do it.
Couple of things. I'm just going to start out and look at different time frames of what I've been looking at, because I haven't been as nervous as everyone else. For some reason, everything that I've been looking at has been working the way it should. It gets down into, into those areas that I've always called the liminal space, because everybody starts freaking out when it gets to a certain level. But that's when you got to really rely on your strategy and your plan and your management and all that kind of stuff. But on the hourly, one of the interesting things that I was watching was, as this price was coming down here and went into the low down here at 29 or so. One area I was watching, and this is just on, and all of this kind of correlates in different time frames, but one of the areas I was looking at was this possible reversal spot. When I say reversal, we've talked about this before. It's the reversal of the current move, not the whole primary trend or anything like that. So it's in other words, as this is coming down on this correction here, this 29 came right into this red zone, which comes from this low at 30,000 all the way up to the high of 33.8. It's this leg right here that I'm looking at, because the reason I'm picking this low right here is because we had 3 closes below that low. So this is the leg that I was looking at for the extension. So if you look at the extension off of this, you get that 127 to 141. So this is that area that I was originally looking at for a possible buy. One of the interesting things is we got in past below the bear zone, which typically, like we did back in here, back in January of 21 or January 21st, we got into area of getting out of the red zone and coming back into the red zone, and it popped the market right here, and it did it again right here, and gave us signals of a nice little bottom before it kind of, local bottom before it goes up. So as it happened right here, it was in the zone. So this would look like a pretty good buy. I didn't buy there. I bought from last week. I was still long at 28.8. I actually sold out all of my short-term stuff already, but I kept a portion of that 28.8 and put it into my long-term trade because this, and I'll show you why I did that. But right now I liked this spot, and I was watching this, and then when it broke right here, then it got interesting, but it broke, but the momentum was still not there. So it kind of went sideways, came back and did a little bit of a throwback to the trend line here. And then it started to work its way back up. It was at this point when it broke into the bull zone and the ADX started to turn, is when my model said this was a buy right here. I think the buy was at like 30, I want to say 32.1 or something like that. I can't remember exactly, but it was just above 32,000. And that would be the buy signal for the hourly. And as it moves up, the initial minimum trade that I was looking at was the distance, taking the furthest distance underneath the trend line and taking that same rate of change to the trend line. Typically gives you, at least it gives you a high probability, as long as there's momentum behind it, it has a pretty high probability of reaching that target as a minimum. So if you're trading this, you could actually trade it there and actually sold out and did pretty well. So now what I'm doing is I'm watching these fibs go in this direction because this is the threshold point. And what I'm liking so far is the shallow fib right now is at 33.4. And that matches up really well with my previous threshold start for the downside right there, to where there was a nice support and resistance flip right here. The price came up and actually tested this level for a little bit, as you can see by this red wick, before it took off again. So this is now my support level to watch on the hourly at 33.4. And if it dips down into here and everything looks, hunky-dory in the indicators, that would be the next buy for me if you want to buy and trade the hourly. So that's what I'm kind of looking at on the what I would call near-term time frame. This is long-term for Joe because he's looking at a lot scalping time frames. But to me, this is near-term time frame. I typically don't do a lot of trades off of the hourly. I usually wait for 4-hour confirmations because I'm a little bit more conservative. There are times I would take them, but this was a buy and a sell. But I did not take that trade. But if you were doing it, that's how you would have read it based on the stuff that I'm looking at. On the moving over to the 4 hour, this is where it's getting a lot more interesting. Same kind of thing, but you know, this was that level that I was just talking about, where the fib reversal level was in this 28.6 to 19 or 29.2. That's where I bought the 28.8 last week, and it actually dipped down back into the zone right here. I didn't rebuy, but that would be a spot to really watch as we get into this possible reversal zone. And as it popped up from here, it moved up, still in the bear zone, but it was moving up into an area that I like to see. And then finally, it broke the threshold, but the momentum was just not enough for me to buy just yet. I still want to be a little bit more conservative. It's actually starting to lip up a little bit. I'd have to check the actual data, but it looks like it's starting to do a positive over positive. It's hard to see or eyeball it on the picture, so I had to pull up the actual data, but I'll do that later. But it looks like it's popping up a little bit to where we get some momentum going the other way. So now on the 4 hour, this was a nice little trend line break here, which also would be just a full retracement off of this high to this low. As it works up, it breaks, and then it goes up. So we got a little bit more to go before it actually reaches there. But again, I'd really like to see a little bit more momentum here to really get excited. I still think things are pretty good, and things are starting to settle out to where some of the support's going to start to come back into the market instead of getting broke every time it's tested. But really, it's this trend line all the way up to the top here, which is right around 36K is the level that I'm kind of watching it. That's if the candle went straight up there right now. But if you take this angle, you're probably looking at, 35.8 to 36K range, somewhere right around in there, that we really need to break above and get some momentum behind this break. And then I'd be a lot more comfortable going a lot more long in the short term once that happens, because in reality, we still are in this, this sort of downtrend in the market. So one of the things that people have kind of been bringing up is the descending triangle. I've had a lot of people ask me and talk to me about a descending triangle, and most of the people that I've talked to, when they talk about a descending triangle, it's not so much that it's not always a bearish pattern. A lot of people think it is, but in reality, it's not. It could go either way on a descending triangle. Because the way I kind of look at patterns, it's not necessarily about the pattern itself. It's about the actual psychology of what's going on within the pattern. And that's what I use the fibs for, is to find out if that's actually happening or not, to where if the psychology is actually starting to change while we're in this period of consolidation. So really just, I'm not a big fan of, like, when you look at a certain triangle pattern, your bias goes toward a certain level, because so many people were saying that it's bearish. And really, I've seen it so many times where it busts to the upside. And actually, if a descending triangle actually breaks to the upside, it's actually extremely bullish because of that bias, because most of the people are waiting for that break of the downside to capture that move, thinking that it's going to go to 20K. And if it never does and it breaks to the upside, then everybody and their brother gets in, and then it just goes like straight up really, really strong. So I try to, when I look at patterns, I really try to figure out what the psychology is within the pattern to not get a bias of which way it should break. And personally, and I'm not saying I'm right on this, but when you look at the 4 hour here, I actually think that it was a falling wedge, which to me is a much more bullish pattern than a descending triangle could be. I like the wedge better. And one of the things I was looking at on this pattern was we had the 3 touches here on the top, and I like to see 3 on the bottom. But the third one stopped short here on the way down, and this is right at that 29. This was the 28.8 the other day, and then this was the retest. And then if you take this trend line here from this low, it matches really nice right at this point. So the market not dropping to this trend line to me is a bullish support, not bullish, but supportive perspective for me. And now we've broke above this. So this is that first signal that I like to see. I'd like to see 3 closes above that, of course, because I always do. I like to filter any kind of trend line, no matter what kind of pattern you're looking at. So right now we got that first one above it. So hopefully it closes above there and we get 2 more closes. If that happens, momentum behind the 4-hour will probably be there, because when we look at the 4-hour momentum, it's starting to build. But like I said, it's this trend line up here that really needs to break. And I feel like if we get this going with 3 closes above it, I think that's when you start to get a little bit more buying interest into the market, and then it pops up. So I don't know if this pattern's right. I'm not a big pattern guy, because all patterns to me are all trend lines going all different directions. It's just a rectangle or a triangle in different forms. But to me, it's all about the trend line, and what's happening within or underneath or above that trend line. And of course, those trend lines are those threshold points. And that battle's going on to know if it's going to bust through that trend line one way or the other. So when it comes down to the bottom of this, and it tries to test some of these levels that people were looking at on the descending triangle with the flat line, that of course that's a nice little area that if it breaks, it's going to be uglier than crap. But the thing is I like to try to figure out, is the psychology strong enough to push us through? And we really weren't getting momentum either way. We weren't getting a lot of bearish momentum really strong, and we weren't really getting a lot of bullish momentum either. So more consolidation is what it was kind of looking at. But that's just how I look at things. It's not a right or wrong. It's just how you attack it. But I had at least 4 people contact me today, so worried about this descending triangle being so bearish. And I told them, I'm like, not all descending triangles are bearish. I mean, if you went back, actually, I looked back at this a little bit earlier today. Back here, last year in May of 20, there was a descending triangle right here, and it busted straight out to the upside. So I'm sure, when people were looking at it last time, every time it was touching this down here, they were freaking out like it was going to break to the downside. Never did. And when it broke to the upside, we just had a nice little launch to the upside. So I don't know. Maybe it was just because the 4 people that contacted me were all bearish. So maybe that's what it was. But I know not everybody looks at it that way, but I just like to show others that I wouldn't always trust a pattern being bearish just constantly like that. So just something I just wanted to show. But if we go on to the daily, and this is where a lot of my stuff is coming from. One of the reasons so far this shallow fib that I have at around 30K on the daily is held really nicely on at least 4 attempts now. And each of these attempts has held well. And this last time that it held, or at least this whole period in here, the bull zone was tested a couple of times, and it hasn't really officially broke. But one thing that is a divergence to me is we're still in the bull zone, and as the market was coming down into this point, and we got into this period of consolidation right around this point, is the ADX was still relatively bearish from this point on. When you look at this right here, the negative directional index is elevated, and the ADX is still, up into the 20 to the 30 range. Right now it's about 23, 24. So that's still showing some momentum for the bears. But the thing is, the momentum of the bears has held at this and kept us in the bull zone. So to me, from what I look at, that's a buy signal for me. That's telling me that there's enough support here at this point in time to kind of hold this market and bring us to the upside. So that's what I was kind of looking at on the daily. I mean, of course, we're watching this level, because if it does break, we'll break into the bear zone, and the momentum for the bears will probably kick in, and we'll drop, on the daily, the 22.7 at the 61.8% would be the first level I would even look at. If this thing broke, it'd probably go even further than that if this ended up breaking, just because the way this is kind of holding up, there should be a lot of buying support staying here. So if this does break, psychology would be everyone that was a buyer at this point is going to jump, take a back seat, and find that next spot, which is not going to be until way down here. For people that really want to be comfortably long. And so far, this level's held pretty well. I mean, not as well as I would like, but this last couple of moves over the last couple of days is really what I've been looking for off of this bounce. And so far, it's working pretty well. So on the weekly, another thing I'm looking at, the 38.2 in the weekly is right at 28.8. That was my original buy. And it was really based off of this weekly because we got that correction off the high into this point. It was right around 30% or so. I really liked it. I was also watching this RSI and this level right here, this dotted line that I have in here is something I was really watching because as this comes down, if this holds and doesn't push down the selling interest even more below this point, that's a major buy signal for me. Now, of course, this is a weekly and we got a few more days to keep this above this line because this is a line that's going to be major support that matches up with this shallow fib. Because when you look back here, and this is the one that I really like to look at is this one here, right in here. As we just like over in here, we were way overextended. Came back down and back down into the green zone. This happened this week, has pushed us into this correction, or over the last couple of weeks, it has pushed us into this correction, just like it did here. But this line right here went flat for a little bit right here. I know it's kind of probably hard to see, but it was flat right at that point. So when you look up at the fib levels off this latest move right here, hold on, I'm getting click happy here. The move up to this point, it held right in here at the 38.2 for like 3 or 4 weeks right here. And that's when this line was flat. But then when it broke this line, it went straight to the 61.8% level off of this move. That's where my concern would be on this 28.8 is this, if this line doesn't hold, I think it could drop straight to the 61.8%, which is 20.6. Which on the daily comes in around 22.7. So that would be the zone that I would look for if this actually broke to the downside. I wouldn't do any buying waiting for that or some other signals that the bulls are back in charge. But so far it's doing what it should do, or at least pattern wise from the fibs that I look at is holding, which makes me comfortable of staying in the long positions that I've been in. Or at least my long terms. I haven't got rid of any of those yet. But if this breaks down, I would want to, unwind some of that to take off some risk. But a lot of it I actually have 21,000. I have 21K puts that go for another 2 weeks. That's for my fall out of bed, but they're probably going to expire worthless. And it was another insurance policy that I bought just in case, but that's the way it goes. But the timing chart here is another reason where it was coming down into this Fib resistance zone around 29, between 26 and 29. And it came right into that buy zone. And to me, that's a lot of support right here, just like it was on the same line. When you look at this line all the way down here, this line right here, fell and kind of tested this line. And I mean, right now, if it went all the way to the line, it would be about 25.6, but it's kind of the bottom of this fib zone. And I like kind of the midpoint of this fib zone that matches up with the weekly, which is at 28.8. And that's where all that came from. And why I'm staying long and still thinking that this market is somewhat supported going forward. Key fib on the monthly is the 38.2 is at 27.4. That's where I actually had another buy order in and never dipped down there to get it. But that's that key shallow fib that I'm looking at on the monthly. And just like some of these other fib zones on the monthly, the 127 to 141 is off of this high and this low right here. And as it extended, this was the first spot I was looking at. And then once it broke through, this level is the area to really watch for support. And which is the 38.2 is just above it a little bit. But this area right in here is my key support area for this being a critical support zone to keep things going to the upside. Because the same thing happened the last time. It was at the high at 13.8 and went down to 3,800. Doing that extension was a critical support zone right here. That busted, actually came back down and wicked into it right here and held support and kept going. So to me, this is a pretty critical spot, which makes sense because it's kind of, that when everyone's looking at that triangle pattern, the descending triangle, that bottom line's right around this level. So of course, if this breaks, this whole pattern goes to shit. A lot of them do. And then all of a sudden you're looking at, a movement on the monthly would take you to 18.4. So here we got 18.4, 22 or 20,000 and 22,000. So it all averages out to be about 20K on whatever time frame you're looking at. So if this does end up breaking, to me, I'd wait for 20K. I don't think I would do anything until it went down to that point. But for now, everything's looking supportive to me, for at least from what I look at. And then lastly, I just put the quarterly on here just because it's an easier picture than the monthly. The trend line broke right here, and that same distance puts us at around 26.8 or so on this. Actually, the 26.8 is the 141 that we just talked about. The trend line break, when I said that was a minimum, well, the minimum was at 27.4. If you look at the line, it's about 27.4 off of this rate of change to this rate of change is the same. And 27.4 is that bottom point to look at. And so far it's dipped down there and held there. And to me, that's a pretty major support at the moment. And this line right here is when there was a nice little switch in the RSI where it made a new high. So that it's really hard to look at what I do on a very large time frame, but you can see that it made a new high at this point, right at the trend line break, and then it hit the target. But now that target becomes support, and it's held so far. And I just kind of like it, and I'm just gonna kind of keep my eye on things and see if we can keep this trend to the upside. So far, the hourly's got the nice look to it. It's the 4 hour. I really would like to see it get above that 36K. And that's when I'll probably start getting back in long, because I'm conservative. I'm not going to buy at 34 thinking it's going to 40. I'd rather get confirmation and buy it at 37, knowing that it's going to 40. So I get that probability of being correct a lot higher than it would be still being underneath this major trend line and fall short, because this thing could easily come back and test these lows again and stay in this consolidation range on the 4 hour. So that's it. I've been jibber jabbing, and it's been really quiet and me just talking. So hopefully I'm saying sensible stuff.
Well, hopefully, yes, definitely making sense to me. Hopefully, people out there are getting something out of it, because the details that you get into are the most important part. And I will go ahead and take over screen share.
I meant to click that button. There you go.
All right. Get into a couple charts that I have. First thing to bring up is very interesting. The times that we disagree is where we're going to actually get some good commentary opposed to just agreeing about things. And for me, chart patterns are basically the most important thing to me. Chart patterns and candles are the most important thing that I trust and believe in.
No, I didn't say I didn't believe in patterns. I said that not every pattern is always going to be bearish.
Yes, for sure. And I will take the perspective that for sure I agree with you. And I also do agree that the trend lines are the most important part to me. And I think I haven't really heard many other people talk about trading wedges to both directions. If we get a rising wedge and we break to the upside, I find that to be a much better signal than when it actually breaks to the downside. So I do think that, taking a moment to consider the underlying psychology of the pattern and the trend lines is going to be the most important thing. But for me, descending triangles are bearish, and they're a bearish pattern that I pay very close attention to. And this is going to be one of the main reasons why I am expecting lower prices myself is...
Wait, can I ask a question? Why do you say that descending triangles are bearish?
For me,
why couldn't they be the other way?
Well, they certainly aren't going to break down 100% of the time. And if they do break to the upside, you could get a lot of shorts trapped and FOMO buying going on. And absolutely, I can see the perspective of that being bullish, but I would still take a little bit of a different perspective, which I'll get into. So for me, what I think of is just kind of the physics of I see a ball that you drop on a table, that it bounces, it bounces, it bounces. And if it loses steam with each bounce, to me, that's a big deal. And it tells me that the sellers are moving down and the buyers are getting exhausted. And that's kind of what Joe was seeing in terms of the buying pressure kind of getting weaker after a very big move. And that, to me, is what a descending triangle illustrates, is a ball kind of losing steam as it continues to bounce. And I would even look for a head fake above this trend line. Bitcoin, in my experience, when it does form descending triangles, they are very reliable, but they are going to take a while to break down. They refuse to break down. So this action that we're seeing right here is reminding me of the last two descending triangles that I saw. And patterns are definitely subjective, and there's going to be different perspectives of patterns based on who you ask, and that's just how patterns work. And for me, this was not a descending triangle. I viewed this as a reaccumulation. I thought that this was a pretty textbook Wyckoff reaccumulation pattern. So I was publicly sharing charts of this being a reaccumulation, and that can look very much like a descending triangle. And again, that's where the details can be the most important thing. So when I'm looking at this current chart, the most similar action that I can think of was what we saw in here, where you have the big move, and then you have the sharp dip that kind of finds some support around the trend line, but then it goes on to create a lower high. And then it fights to hold support, a little head fake below, but it fights to hold support, creates a lower high, then really looks like it's going to break down. Like for me, this is kind of where we're at right now. And this is just my opinion. It really looks like we're going to break down, and then it gets that last pop, and then goes sideways, lulls everybody to sleep, and then it finally moves, and it moves in like one candle. So anybody waiting for a close below to actually sell the descending triangle, well, the close below happened after the entire move happened, and that's why trading can be so difficult. And just kind of the last descending triangle that we saw, again, it was well formed, well defined. A lot of people saw it, but how long it took to break down was a main reason why this thing was so hard to trade. And each time you came to support and it looked like it was going to go, it didn't. And then it went lulled you to sleep before actually making a big move very fast. So that's what I'm seeing right now myself. And if this does break to the upside, I would be looking at Fibo's perspective of this being a falling wedge. And if that was to happen, I would be very much viewing this as a Wyckoff distribution. And when we get big moves, I look for accumulation patterns and I look for distribution patterns. And if this does break to the upside, let's just go ahead and take a look at the target. It would be somewhere along the lines of, depending where it broke, let's say 42 or so. So keep this chart right here in your mind with that 42 target as I go ahead and go over to this archetype here, where we get the preliminary supply, the buying climax, the shoot down to this AR. This is where I really start paying attention to the Wyckoffs. It's the first time where you get a retest of that prior low of a consolidation or a correction. So let me try to sum that up, where we have this move going to the upside. So here's your low, and then you move, and then you create a higher low, and then you move, and then you get something weird happen, but still you fail to come back to test this low. So you get kind of the bull flag that moves, and as long as you keep supporting, it keeps moving. But boom, here you go. You have the bull flag that takes off, and then instead of making a higher low, it comes down and creates an equal low. So that is kind of the first step for a Wyckoff, is the Preliminary supply, bull flag, boom, buying climax. So for buying climax, you'd want to check volume. And we do definitely see some good climax of buying right in here. But really there's a lot more volume in here. So that'll be interesting to pay attention to. But then after the automatic reaction, what we look for is kind of a secondary test that creates the lower high. And then you come down to test the automatic reaction. And this is where you get the descending triangle / falling wedge situation. But if it breaks to the upside, that's where I would be very, very worried about an upthrust after distribution. I guess this is the upthrust after distribution. This would be the upthrust, which you get the higher high above the buying climax before, just really chopping around viciously and then getting that correction that everybody's kind of waiting for. That's what I'm seeing, and all along I've been really looking for a retest of phase 2. Hyperwave Theory states that best time to buy is phase 3, near the trend line of phase 3, and phase 2 is a little early on because it's not yet a hyperwave. You really need it to accelerate off of the phase 2 trend line and then get a correction and support a higher velocity. So maybe, I mean, if this does break and take off, then that would be my phase 2. But as it stands, I'm still looking for a retest of this phase 2 line. I might have said that backwards. If this supports here, this would be my phase 3. As it stands, this is the 2, and I'm looking for a retest of it, and still very much viewing it as a broadening accumulation cylinder, basically like Jesse Livermore would label it. So from a long-term perspective, all very, very bullish, and I'm very, very interested in buying near this trend line. And if I do that, it would be using other tools and also keeping Hyperwave very much in the front of my mind, thinking that, yeah, maybe this does turn it, we do get a phase 3 and maybe we do get a phase 4. And then that would help me with profit taking. But for now, this would not be an entry based on Hyperwave Theory. It would just, there would be other things coming into play there. And something I'm going to be paying close attention to are the weekly candles. Weekly, we have a lower low here, lower high here. First time that's happened on this whole move. We got a couple of red candles back in here, but each time, look, higher low, higher high. And then this one, it did get a lower low, but boom, we immediately popped. So this is a spot where, yeah, we could immediately pop, but I'm seeing some reasons why I don't think that will happen. The main thing I'm looking at is going to be EMASAR. Let's get that on trader mode. And I guess I'm gonna have to do something like this. Getting used to the streaming on the laptop, and I feel like I'm getting pretty good at it already. So hopefully I don't just jinx myself. Okay, let's see what we got here. We've got, for me, what's a big level of resistance at 36.5, which was very curious how that was where Joe was looking at for his stop using 100% different tools. So these recent moves down have caught perfect support right there on the buoy with wicks below, but not even a single close below, and quickly reclaiming the beach, turning the 200 into support opposed to turning it into resistance and getting a death cross. So that is a big sign that we didn't pull up and into a death cross right here, but it still smells like a trap to me. And this would be my invalidation point for that. If it does spend some time here, for me, what I've grown very used to and expect to see is that if it's going to take off, it's not just going to shoot straight through this big level of resistance. It's going to have to spend some time consolidating there first. So let's just kind of see, take a look back at kind of when we test the buoy, we move up into the sky, and it does end up taking off, but it really took some time. And then here you move up and you do move into it and through it, but still you had some time to really prove the strength and really show that support was moving up. So that's what I'm really going to be waiting for is proof that this thing is ready to continue, at least based on the indicators that I use, such that if we do break through this trend line, I'm going to be really looking at this as a big area of resistance. And then even if we do break above 42, I'm going to be waiting for that to be turned into support. I'm going to be very much looking for a potential upthrust in that area. And where I'm at right now is sitting in a really good spot. My main goal for a multi-year bull market is going to be to take out my initial investment as soon as I can leave myself a very significant amount of exposure. And that is what I'm doing now. And it makes me feel like I'm sitting pretty, such that I'm no longer taking any risk. And if Bitcoin does take off tomorrow, I'm going to still be having a significant amount of exposure. So I'll get into that here in just a second. Once I can do, okay. So I clicked the wrong button on the indicator. We've got not the position size to display signals. This must be a old version with a little bug in it. No problem. So anybody that's been following along has been aware, anybody that's been paying attention. We have been looking at the long signal on Bitcoin around 96. And that's where I started scaling in on beach tests and doing my best to take a little bit of profit and not too much, and then re-entering as long as it was in a really strong spot. And then up here around, I want to say right in here, as we were doing that show last week, I was looking for a pull up and into the 50 EMA, and I was very much selling this price around like 32. Maybe, yeah, 32.2, something like that. Definitely lower than we're at now. But I couldn't feel happier about it because I was able to pull out 100% of my initial investment, and I left 30% of the initial exposure on the table. So as I was scaling in and out and whatnot, and trimming, and once I was at these prices here, I was able to sell 70% of the exposure, and that recouped 100% of my initial investment. And now that left 30% of my initial investment on the table. And 100% of my initial investment was everything. I'm the guy who started cutting his own hair to put $20 extra into Bitcoin. I mean, it was everything. So now that I have 30% of an all-in exposure still on the table, I mean, if this thing takes off and I don't get another chance to buy, anywhere in here, I'm a very, very happy camper, and I'll have money sitting on the sidelines for really good opportunities. So that's where I'm sitting, and what I'm talking about for myself is being a really good opportunity. Let's see if I can get that position size off of there. There we go. There's no bug. I was the bug, of course, as usual. So I look for patterns to pattern targets to line up closely with critical areas. When that occurs, it's just kind of gets the hair on my neck standing up just a little bit, kind of just makes me remember certain things, whatnot. So if this does break down from here, the target would be right around 19.3. I think Fibbo said 18.5. So basically right where Fibbo was looking. And then that's also where the 200-day EMA is. So last week when I was looking at a pull up to this 50 EMA is because we were extended from it and needing to revert to the mean. And that's what I am seeing on the daily chart in terms of, let's go ahead and pull up the distance from moving average, take off the volume. And that's going to be the 20. So we're going to change this to 200. Just to look historically how far we've gotten away from it before reverting. And I can't zoom out anymore, so I'm just going to draw a horizontal. Okay. So we see that, that was 2017. So here in 2017, not at any point did we get as far away from the 200-day moving average as we did here on this move. So that's a big deal for me. and makes me think that it is high time to revisit the 200-day moving average. And the descending triangle is offering some sort of confirmation, at least in my mind. So I will be definitely targeting this 200 EMA, and the longer it takes to get there, the more it'll continue to move up. So that will all be based on how long it takes to get there. And something else I just want to pull up very quickly is the monthly chart. This wick is really a problem for me. Again, as we haven't gotten this far extended from the EMA, what I do is I just try to sit back and wait and just see how far can this try and go. What sort of legs does this thing have? And I wait for a couple things. I wait for candles, and I wait for patterns on the daily, generally the daily, 4 hour to daily are going to be patterns. And as long as we're not painting bearish patterns or bearish wicks, I just have every reason to believe that the trend is going to continue. Whereas once that does start to happen, it's when I just take max profit, get the heck out, cover myself like Fibbo does with the buy and puts, and Joe does by trading with leverage and consistently managing his risk. This is where I am, very happy to just buy back higher if I need to. But it's once I am getting the first real signs of some sort of maybe short to medium term exhaustion, that's when I just have to pull the trigger and then just sit back and wait. And that's also something that's very, very important to me as I'm out here on the reservation getting some spiritual time. I have just really I've really learned to value taking a few days away after making some big decisions. If you really are stressed out about buying or selling, or if I didn't get enough in at where I should have, or I bought too much up at 38, or whatever the case may be, when you're really, really stressed out and you just got done making a big decision, just taking a little bit of time away, whether that's just a 15-minute walk around the block to go get a water from the gas station, just something to just kind of shake yourself out of it and then see how you feel. For me, I trust my feelings more than anything. And if you are still, learning and gaining experience, your feelings will lead you astray more often than they won't for the most part. But if you have a very good process in place and you are consistently sticking to that process day in, day out, year in, year out, your feelings are going to tell you something's wrong here. And when I make these big decisions, I don't know, at first it always feels wrong. And if it feels too right, then it's definitely wrong. And once I just take a little bit of time to get my head out of that zone and get out of that and shake myself out, now I can start to gain perspective and really, I think, get a more objective view of things. And then if I'm, feeling like, man, I really need to buy back right now, well, that tells me I should probably wait even more. The more I really feel like I got to get back in, the more I am susceptible to making a really bad decision. And the more I can just sit back and be patient and let the market come to me and just wait for my perfect opportunity, that's when things really work out. But the only way that works out is if I'm first able to let go of missing out on a big move. Like say a huge move happens and I just happen to miss out on it, and my perfect setup never came, or it did and I was sleeping or something like this. I have to be able to let go of that to really allow myself to become detached from the marketplace. And once I do that, I start to get a good feeling for, okay, is this my perfected setup? And it's like, well, no, definitely not. I have no clue what's going to happen here. I'm seeing a lot of things that have got me concerned, and okay, I remember this is definitely not the time to really be getting in a big long after a huge move has just happened. And it's definitely time to be protecting any profit that I have, or making sure that I am hedging risk properly. So that is my spiel. Trying to think if there is anything else. One last thing before calling it a day and getting myself some much needed dinner. Just pulling up the hourly chart, which is kind of agreeing with the 4-hour in terms of big confluence of resistance here. This is the marker. We had support here, tried to, resistance there, and now here we are back again, and it's lining up with the buoy. So as we saw on the 4-hour, how clean that buoy has been as support through and through on every chart, every time frame you look at. This is a hugely critical level, and when we get the buoy crossing with the marker, that is a big confluence of resistance. It's a smaller time frame, but it's not like the 5-minute. This is an hour, which complements the 4-hour very well, and tells me that this is a big area of resistance, and that, yeah, we might eat through and go off, but it should take time. And again, here we are above the moving averages with a bearish cross. So we've got a price extended from the 50 EMA at a confluence of resistance. And this is a spot where I would be taking some profit and shorting around 36 with a tight stop. It's interesting, but I really am not. I want to do my best to stay with the longer term trend, and instead of shorting something like 36, I want to just be prepared to buy 20. Because if I get too focused on trying to short 36, then all of a sudden I lose focus on buying, and trying to do everything at once never works for me. Whereas really having a long-term goal, being, writing down my objective, believing that I deserve it, and then sticking to the process that I have learned is going to be what works for me. And it's only going to work if I don't try to do everything at once, and I just accept my limitations. I accept the times that aren't my perfect spots. Like here on the 1 hour, yeah, this is a pretty darn good short setup, but this definitely is not a perfect spot because it's a small time frame, and there's a lot going on the higher time frames. So I don't want to get impatient. I want to remember that there's always going to be some incredible opportunities on the table as long as I can stick to my process and continue to manage risk. Okay, dokie. That's going to do it for me. Appreciate you guys sticking around and listening to me blabber on. Trying to think about what to get for dinner, barbecue or Mexican food. What do you think?
Mexican food, but I have one thing that I wanted to show you and Fibbo real quick. It's just going to take a split second.
Like
I just threw the
enchilada
descending
recipe?
triangle. No, even though I could share that, but real quick, just to put the descending triangle in perspective, this is what the order books look like at the bottoms and as we near the tops. Just for a quick view, I'll send this to you guys in screen share or in the Honest Analyst. But yeah, so just saying, there's the order book has been supporting the bottom. It's been getting weaker and weaker. What you were talking about, and the sell signals have been showing up. So near the top. So anyways, just wanted to share that, and I'll share it with you guys, and we'll monitor that, of course, and see how it plays out in a week. We'll be keeping an eye. But yeah, Mexican food, get it.
Yep, you know it. No matter what happens, we will be doing our best to be here at the regular time. And if we can't be, then we'll do our best to do it a day earlier or later. We have done really good at sticking to this weekly cadence, and that's what's important to me. That's the process. There's so many days where there's so many other things going on, or so many excuses, or whatever the case may be, and having that commitment and sticking to it, and then having some times where it doesn't work out, but we don't quit. We keep pressing forward, and some weeks we're right, some weeks we're wrong, but every week for the most part we're here. So that's what's most important to me, and I really appreciate and value you guys' time and expertise, because I think that we really are adding something unique to this space, not only with our experience, but also with the tools that we have developed. This is the time when they really get put to the test. The fact that we all survived the last bear market is a huge testament, and And now we are in a spot to kind of show what tools allowed us to kind of navigate through. And Joe's new wand is definitely a tool that I'm needing to get myself. I'm feeling like I'm missing something here. So I appreciate you guys for being who you are, and I will go ahead and stop the live stream with a shout out to the chat. Thank you guys all for being here and chiming in and clicking the thumbs up, subscribing and clicking the bell so that you know, sometimes we forget what day of the week it is. And if you get that notification, let you know that we're coming live, and maybe you forgot it was Thursday, even though you were gonna be here anyways. So make sure that you got that clicked, and share this with any friends or family. I've been getting a lot of friends hit me up like regularly. Where are you buying? Where are you selling? And it's really cool. I just got to send them a link to my Twitter and my YouTube. So if you guys are having maybe too many messages, or just you're not feeling like you got all the answers that you want when your friends hit you up and ask you about what the hell is going on with this crazy volatility, give the Honest Analysts a shout out and tell them to come check us out on YouTube, and go check us all out on Twitter as well, at Joe Saz, at Fib Swanee, and at Sawcruteez. All right, see you guys next time.
Peace.